Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Thursday, May the 23rd, 2013, and here is today's After the Bell market summary brought to you by WallStreetTrading.com. I want to first off by taking a look to see how the indices closed here on this wild day that we had. Going into the opening session, the futures were down a lot from the overnight session. We had the Nikkei, we had some pressure coming in from the global markets as we had the Nikkei down 7% here, and we had a whole bunch of selling overnight at the future. So we did make a nice recovery off of the lows today, and we have to take a look into that and see how some of the stocks reacted to that, and just take a look at some of the technicals that we have on the market here. Again, I was not able to make a video here for the past 2 days. I've been working on some of our education that we're going to be putting out here pretty soon in the next couple days, and that's going to be coming out pretty soon, and it looks pretty good, guys. So you guys want to make sure if you're interested in some of the techniques and strategies that we use in these videos and in our live chat room. Again, if you have not been to our live chat room yet, you could go to wallstreettrading.com and fill out the form on the right-hand side to get the access to our chat room there. But I will be getting this education out within the next couple of days here. So if you're interested in some of the strategies and techniques that we use and that you see us use live intraday, you want to make sure you sign up for that. We'll be teaching a course sometime mid-June. In any case, let's go ahead and take a look at this wild market action we had today. The market was actually able to close well off the lows here. The Dow Jones closed down a little over 12.5 points, but it closed down 0.08%. The Nasdaq closed down 3.88, 0.11%, and the S&P 500 closed down close to 5 points, closing down 4.84 points, down 0.29%. So we made a nice recovery off the lows. If we take a look at the breadth, we had 3,393 issues declining on the NYSE, NASDAQ, and the AMX. We had 2,727 issues advancing on the NYSE, NASDAQ, and the AMX. So I'm pretty sure that number was more lean to the bear side on a 5-to-1 basis or so. But again, we were able to make a nice recovery off the lows. The strongest stock in the market today that I see was HPQ. If there was any other ones out there, I probably missed them. But the strongest one, the most notable one, was HPQ, which we'll take a look at that chart here as well. But in any case, let's go ahead and take a look at the SPY. The SPY closed down 48 cents, closing down at 165.45. And at the same time, again, I was not able to put out a video here for the past couple of days as I've been working on some other stuff here at the company. But I have been showing you guys that trend line to pay close attention to from that nice little upward channel that we had that started last year in June. We actually broke down out of that channel back here in October. And like I told you guys all the time, you want to make sure you keep relevant trend lines on your chart. All right, and if you've been watching the videos, I've been telling you guys to pay close attention to this area right here. We have this key trend line, and as you can see yesterday, all right, we rallied right above it, and then we closed above it. So we do have a nice little reversal topping tail candlestick right here, and we had that follow-through action today. Overnight, of course, they didn't have a nice little sell day in the markets. They sold it off overnight. These institutions, all right, sold it off overnight, and it provided a buying opportunity for retail and a buying opportunity for them to cover their shorts and get back along the market. As as you can hear on the news today throughout the day, everybody was saying that the selling action was not a big deal, but we'll see. We have broken below the short-term moving averages that you can say we have been holding up above since mid-April or so. The rising 8 and 5 EMA, and then they bought the market right in front of the 20-day simple moving average and exponential moving average area right here around 163.5. We made a low today of 163.94, and then we closed at 165.45. So nice reversal. We definitely want to see the market kind of base out around here. We do have this little 3-day kind of resistance right here that was a prior breakout level. So there's, of course, prior breakout, prior resistance becomes support now. So you can see it bought us right in front of that support level. So we definitely want to pay close attention to this 164 level. If we could chop around here, hold 164, and hold this moving average, which hopefully could rise into this price action instead of trading sideways, or trading sideways to lower or whatever, which I don't expect that right off the get-go because we have not even touched the 20-day moving average yet. But if we could trade sideways and hold these levels of 164, we could possibly develop a range between 164 and 167 and go from there. All right, but again, we have broken this nice little accelerated uptrend line that we have been in since, say, call it around April the 20th or so, and we have to pay close attention to what's going to happen here in the short term. All right, so that's how the SPY is looking. Let's go and just show you a quick little glimpse of how the ES is looking from the overnight action and yesterday's action. Yesterday's action, crazy move up, crazy reversal. overnight we had that selling pressure, but then when we opened up, they bought us off the lows, and now you can see we're right in this little area right here. Level to watch on the ES is definitely this 1650 area or so. All right, so let's go and take a look at the triple Qs, though. We did see a little bit of strength in, well, not a little bit of strength. We saw some strength in HPQ, but let's go take a look at the triple Qs here as well. The triple Qs, they broke their accelerated trend lines here, the 5 and the 8 EMA. They are still above the rising 20 EMA SMA right here around 72.61. We really want to see the triple Qs recover back above these short-term moving averages here. If not, they do have some more room to fall. We do have this little gap down here around 72 and this little 71.35 area or so. All right, and again, we have broken this accelerated trend line right here on the NASDAQ as well, this little accelerated channel, so we could pull in a little bit more. Again, we are coming all the way from 67, all right, to a high of 75. All right, so those are the levels you want to watch. Again, the 72.50 area, that 20-day moving average, and then this resistance area right here, which is kind of our range we're working off of right now, around 74.50. So we could just kind of chop around in this little area, maybe flash down a bit here. We'll see how it shapes up. If you take a look at the IWM, the Russell 2000, just looking at the ETF, the IWM was able to close up 0.12%. This one bounced right off of the 20-day simple moving average right here around 96.60. And that's definitely going to be a little reference low to work off of. And we could get some back and fill into this red candle up here towards this 98.63 or so. But you definitely want to make sure you keep an eye on these short-term moving averages that we've been holding and using as a gauge to kind of measure the strength of this trend, which you can see died out a little bit ever since they this whole talks about Ben Bernanke maybe pulling away some of that little stimulus that he's been doing with the bond buyback program. We've been getting this little jittery action in the market, so you definitely have to pay close attention to that, what's going on and what's going on the global scale and the currency markets and everything. Everything has to be taken into consideration with this market environment we have right now. So that's how the IWM is looking. Let's go and take a look at that VIX, though. I really want to see how the VIX is shaping up to this. And the VIX had a nice little gap up today, and, of course, they sold it down. You guys know the drill. Every time the VIX gaps up, they sell it down, they sell it down, they sell it down. So, again, if we see a little bit of changing characteristics here, that'll be something that we'll take note of. At the same time, we have been trading in this little range on the VIX between 1350 and 1250 for the past 2.5 weeks or so. So, this 1350 level on the VIX is going to be something that I'll be paying close attention to going forward. If we move right back below and we start holding back below it, then I'll expect them to take it back down to 1250, and there's no fear in the market. All right. One thing that I'm using as a gauge as well is the bonds. If you guys recall, we talked about the Treasury bonds having a possible head and shoulders pattern on the weekly chart, and so far that is playing out to the T. All right, we had a little bit of buying pressure today, but the bonds are still looking weak. And if the bonds are still looking weak, all right, and the VIX is, still at low levels, that could be telling us that, they're still unraveling, selling some bonds, rolling into different assets like equities. I wouldn't say gold because gold has been all over the place. So that's how the TLT is looking. Again, a way that I told you guys to play the TMV about 2 weeks ago and a week and a half ago, I can't recall, was this TMV, which is actually 3 times long. It's three times ETF, leverage ETF, and it's actually a bear ETF. It's 20 plus year Treasury bear 3 times ETF. So in other words, if those bonds were to continue moving lower, this thing could have a nice breakout. And again, if you want to take a look at some of the analysis that we did on that, you can go to the weekend review video that we have on our website under the My Wall Street TV tab in the upper right hand side, or you can check out our YouTube channel, My Wall Street TV. All right, so let's go and take a look at some of these currencies, the dollar and the euro, see how that's shaping up. The dollar is actually having some trouble trying to break past this little trend line that we've been tracking since we broke this little upward slope channel. You can see we've been having some trouble trying to close above that 84.5 level there on the dollar futures. So we could get some sideways consolidation, maybe some little back and fill action here, but the dollar is still obviously still one of the strong currencies out there right now. And then if you take a look at the euro action, which I have not been able to take a look at here, you take a look at the euro action, the euro is actually getting a bounce, and we have to pay close attention to this 129.88 area, 130 area call. If we get back above 130, that would be a good sign for the euro. And lately, the euro, lately all this currency action has been kind of, and I'm still trying to get a read on the price action with the marks and the currency via the dollar and the euro. So we're just watching it right now. That inverse correlation with the dollar and the markets that has kind of died out a bit here. So we've been tracking the kind of see what type of action in the currencies are moving with the action in the markets, how they're correlating or how they're working uh, together, or whatever, however you want to say it. But that's something to keep an eye on. The yen, I'm hearing is a big factor in what's going on with the markets and what's been going on, of course, over there in the Nikkei. And that big drop in the Nikkei did kind of shake out some investors. So therefore, we did have some institutions doing some heavy selling overnight in the futures markets, which again, we've recovered that today. So that's how the currency action is looking right there. Let's go ahead and take a look at some of these commodities here to see how they're shaping up in this environment that we have right now. Gold, gold did hold that nice little double bottom that we had down there around this 130 area. So we'll be working off that little double bottom. If we get a break over yesterday's highs, that could probably trigger some more buyers. We did have a nice little pause day today, and we were able to make a higher close from the previous day's close. So that's something to take into consideration. If we take a look at the gold miners were up 20 cents. They still have a lot of technical damage. They still have a lot of technical damage that was done on the chart. Therefore, they still have a lot of recovery, technical, work that they have to do to make up this damage that's been done on the chart here. But little shakeout action below this pivot low. I would say if we hold above this little area right here, we can get some consolidation and see if some people want to buy the gold miners up. But aside from that, man, this is just a sector that I would be staying away from. Obviously, I'm still a big fan of tech. Like I've been telling you guys to buy the tech stocks, I'm still a big fan of tech, and that's where I think that you want to be allocating some of your resources to, which we'll take a look at that shortly. But the gold miners, precious metals in general, they're not recovering at all. They're still, still looking pretty weak to me. So, a little bounce action on Monday, a little sideways choppy action. They still have a lot of room to make up. Now, if we take a look at crude oil via the ETF here, I'm going through the commodities via the ETFs. Crude oil, USO, recovered actually pretty well in this little gap down. Remember, we are watching, we did get rejected at that 34.50 area, and we are watching this little 33 area, which was a breakdown from the head and shoulders pattern that we had right here, the neckline. And then when we recovered back above it, that was pretty bullish. You can see the market was pretty bullish, but then all this action we've been having here in the short term has knocked crude prices back down. But if buyers come back in, we start building a nice little high base consolidation above this 33 from these little lower pivot areas, then that could be giving us a clue that we have a nice little chance of making a move back up towards that 34.50, and then we'll gauge it from there. And I really like to look at the crude oil futures, so let me take a look at this with you guys as well. Crude oil futures, let's see, they are still holding above that 94 level. Again, they did hold that nice little hammer down there, and it just looks like institutions or some big buyers are coming down here and buying this 92 level. So you want to make sure you keep a close eye on that 92 level here. All right, so I went over everything that I usually go over. Let's go ahead and take a look at some stocks here. Now, starting off with HPQ, which was one of the stellar performers in the market here. They had earnings yesterday after the bell, if I'm not mistaken. And then they came out with earnings of, after the bell, they came out with earnings of 87 cents per share versus an estimate of 81.5 cents. So that was actually pretty good, and we saw some good strength out of HPQ right out the gate, and a nice little tight consolidation midday, and that just caused another move up. So tomorrow, you want to, if it was to pull back a bit, you want to watch this 24 level. If it wasn't to pull back to 24, you want to watch, say, this 24.35 area. It's kind of like a little back test at the top of resistance range. Should act as support on this side. So either way, HPQ is definitely a stock that showed some relative strength to the market and relative strength in general, and it's looking pretty good. It looks like it wants to go higher. If I take a look at my weekly chart on my other screen, which I'm not going to move over here and show you guys, but the next target on HPQ looks to be around, really around 28. Right, so that's some good targets right there. So keep HPQ on the radar. Apple had a little pause day today. Apple has been making a nice move off of the 420 level that I discussed before as a good level to get involved. Remember, I was like, you don't want to buy it up here. You want to buy it kind of somewhere back near this 420 area where we had that little head and shoulders breakdown action that took place right here. We had that breakdown. Now, it didn't break down all the way to target, but it broke down. They rallied it back up, and then that key level, 420 level, held as support. So Apple's still looking pretty decent. If you're long from this area, you're still looking pretty good. You can still use this little pivot at 430 as a level to watch against. Amazon has been showing some decent strength, for the past couple. Hold on one second. That's an office phone. All right, sorry about that, guys. Amazon has been showing some decent strength for the past couple of weeks. Again, we are in this nice little big channel that you see right here, and we are using this 50% trend line, which is what I teach which I teach my students, of course, as a good measure. You know, above it we're bullish, below it we're bearish, above it bullish, below bearish. It works, guys. It's easy as it sounds. It works. So what we're going to be looking for this time, since we actually broke above that 50% resistance, we're going to be looking to see if we get some some little chop action around here. So if we hold that above that 50, or I say above this little 260, 257 half area, and if we do, and we make a nice little high pivot low right here to start going back up, I believe that will be a nice little entry, expecting to break out for a move over this little 270 level. So we'll keep you guys posted with that. Again, that's definitely a good trade that could be setting up right now in Amazon. All right, but aside from that, we had a little broad market selling pressure there, sell off a bit. So some of the stocks recovered, some of them didn't. Another strong stock that we've been keeping an eye on here has been this ExxonMobil. Ever since it broke this nice little downward trend line that we've highlighted to you guys before. All right, we got that breakout, we got that back test. The back test was a perfect buy, and this thing had a nice run from 89 all the way to 93.50, guys. So again, you want to make sure you're tuning into these videos, because this is another stock that we called out that has had a nice little run. Whether you're a swing trader, options trader, whether you want to trade this action intraday, we can help guide you with that trade management and that analysis there. So ExxonMobil looks pretty good. Let's see if we can get some type of high base above this little pivot to kind of form this little area right here to see if it wants to continue that little march, that little upward trend that it's been in right here. We'll keep you guys posted on that. What else did I want to take a look at here with you all? Goldman Sachs, some of these banks that have been on a nice little run. All right, Goldman Sachs, same setup, broke this nice little downward channel right here. All right, got that nice little other top channel, broke out. This little action, another trade that we highlighted to you guys. This thing has been on a nice little run. Had a nice reversal bar yesterday, which I didn't get to explain with you guys here because, again, I was not able to do a video yesterday. But had a nice reversal bar yesterday, sold off a bit. Gap down this morning, sold off a bit, then recovered. One level you want to watch in this Goldman Sachs is this key 154 level, guys. Work off of the 154 and this 161 area. All right, JP Morgan, let's take a look at this other bank right here. JP Morgan, this bank still on a nice little uptrend. You know, this one's in the power trend. Look, chart does not even look damaged, all this action that's going on. So definitely a stock that you want to be paying close attention to right now. If the market has another follow-through day tomorrow, this one could possibly break past the highs and start making its way back up towards these 55s. Right? On a day like this, what you want to do, you want to go through a couple of your stocks that you trade, go through some of the key market stocks and see how they reacted today. And so far, so far it looks pretty good. Right? The bulls, I would say, won today because we had a nice little gap down, but a lot of the stocks were able to recover off their lows along with the market. So aside from that, we'll have some more research for you guys tomorrow. Make sure you go check out the website, wallstreettrading.com. We are finishing up our revamped education course. So if you're interested in taking that as well or checking that out and seeing what we have in the works as far as the pricing and how everything works and the material, be sure to check us out at wallstreettrading.com, guys. Have a great night. Cheers.